Welcome to the JD Power Insurance Intelligence Podcast. I'm Michael Vermillion with JD Power, and we have a large group with us today. And what we're going to focus on is a recap of the 2025 insurance claims event that we held in Chicago recently. And so, welcome everybody, and we'll introduce you as we have you join the conversation. So Scott Corder from JD Power is with us. Scott, why don't we, just to kind of recap the event, why don't we touch on a couple of the keynotes from the beginning of the day, and then we can kind of dive into the panels one at a time. So our first keynote was from Ken Rosen.
Yeah, thanks, Mike. Good afternoon. So just a couple of comments. This is a conference that was attended by the top 10 insurance carriers in the U.S. It's focused on claims, customer experience, certainly a key touch point. We got the meeting kicked off with Ken Rosen. Ken is the former chief claims officer for both Allstate and USAA. So he has the claims executive perspective of running a claims organization for two top five insurance carriers in the U.S. And, a few points I would just mention that Ken relayed to the audience that resonated pretty well. He did talk about anchoring your claims operations around four key pillars: accuracy, experience, expenses, obviously, and compliance. And I know that resonated with the audience. He did also talk about embracing change during his presentation, which was fairly important, and then also trying to manage through financial times that might be more difficult or more opportunistic, just having more of a consistent claims operational approach. So those were a couple of the intro points I know that Ken mentioned during his presentation.
Yeah, one point I'll just add. One point that I thought he made that was kind of interesting too was talking about, drilling into the experience. It was that, on both sides of it, it's yes, the end consumer experience, but it's also your employee experience. Right. And I think it made a point of just saying, look, it can't be greater at the end consumer than it is for your own employee. Right. And we've seen that in our own internal kind of operational benchmark study, where one of the biggest correlations we saw to overall company sat was your turnover in your call center and your adjuster staff. Right. Happy employees make happy customers.
Yeah, that's a great point, Mark. And so obviously we've got Mark Garrett from JD Power joining us today as well. So Mark, from there, we actually had you give us kind of a state of the industry around claims, right?
Yeah. And I was really, I think Ken did a great job kind of teeing up kind of the state of the marketplace. I kind of elaborated on maybe a couple of those points, right? We're going to talk more about the customer experience, more about the impact of some of the financials. I think one of the things Ken kind of teed up front was that, hey, the industry was slowly kind of recovering, right? It had a positive combined ratio. It looked like 25 is kind of trending that same way. But he did mention, hey, property is a little bit slower to kind of turn that corner, right? Auto is doing much better. And so I probably primarily focused a little bit more on the auto side of the business since we just published our auto claim study. But really, I think one of the key points I was really making was the data, really seeing the impact, this tail that we're still seeing in our data around price increases, right? So we're still seeing, over 40% of customers with the price increase. So we really wanted to highlight what's some of the other impacts we're seeing. A good example was over a quarter of customers now have $1,000 deductible. And that's up to almost, over 40% for people who are, young Gen Z insureds, those who just switched carriers in the last year or so. I mean, so we know that people are really making these changes to their policies. And then you have a claim, kind of what's the impact of that, right? Especially, I think one of the things I highlighted is I dropped rental coverage, raised my deductible. Now I have a claim. That was one of the most lowest satisfying groups we saw and trending down by 20 points. I mean, so there's, so I tried to highlight, some of the issues that the industry is seeing. But on the other hand, I guess on the flip side of things, because of those high deductibles, maybe people worried about filing claims, we're seeing collision coverage being reduced. We're just seeing less claims happening in the space, right? So less claims mean people are getting through this process quicker. So the shop backlog is back down to, pre-pandemic levels. So people are getting through. We've seen our cycle time reduce a couple days. I think it was about down 3 days. So ultimately that lifts satisfaction, right? It makes the process a little easier to communicate. People get their cars quicker. So we saw repairable claims up in satisfaction. Unfortunately, though, the total losses were also trending up, and we see that a big opportunity for the industry. We saw total losses actually trending down. So that was, I went into that in a little bit more detail. But I think maybe the last point just to make that I thought was very noteworthy in my kind of state of the industry, what we're seeing is that the relationship of a strong claim experience and retention is getting stronger. right? So if you look at people who say they had a bad claim, they are much more likely now to either have left their carrier or say they're, not intending to renew their policy. That was, we saw a 4 percentage point shift where there's, 60, I think what was it, 67% or something like that. Now we're saying, look, I got a foot out the door. I intend to leave if I have a really bad claim. So we're seeing that relationship grow stronger.
Yeah, it's a key point, Mark, especially with the emphasis on retention in the industry. So we did have one other keynote. So before we turn to talking about the panels, we kind of took a break in the middle of the day to kind of step away from insurance specifically and talk about innovation. And so we had a guest speaker from Amazon AWS, Kristen Jordan, who shared with the audience the new product development process at Amazon, and it's a little bit harder to describe in a short period of time, but essentially it's kind of a working backwards approach. And so one of the I think really unique things that Amazon does is that when they first sit down to design a product, they actually write a press release in terms of what would the press release look like if we sent it out today announcing this new product. And by going through that exercise, I think that helps the organization, everybody involved in the product and the project, to really help visualize what they're trying to build, and then work backwards from there in terms of, okay, what do we need to make happen to bring this thing to life? And so that was a great conversation, lots of questions, and I think everybody in the room really appreciated having that opportunity to just spend a few minutes to focus on the innovation side of things. Okay, so from there, why don't we just touch on some of the panels that we had, which were terrific. The panels were members of the JD Power team, along with industry experts, talking on the various life cycle stages, if you will, of a claim. Starting with first notice of loss. So, Mark, you moderated that panel. What was the kind of key highlight or takeaway from the first notice of loss panel?
Yeah, it was an interesting panel. We had some good representation where we had, an insurance carrier on the property side. We had a kind of roadside assistance tow company in Agero, and then we had, IAA representing, that salvage side of the business. So all of them, I think, have a role in that early kind of claim reporting process. So some of the things I think that were talked about that were pretty interesting there is, one, just the prevalence of, how much technology is changing this process, right? And people are, I think, implementing technology and maintaining, some of that empathy and concerns. We always saw, I think years ago, that was a big issue, right? Having that empathy, showing concern through a technology platform. Where now we're seeing some of those AI kind of chatbots, some of those interfaces are getting much more, I think, more customer friendly speak, things like that. So, commenting on some of that. I think it was interesting to hear just, telematics is the future in this space, certainly. Trailing a little bit, the home, I think tech is not quite there. I don't think we're quite going to get to that automated claim reporting on the home side. But telematics, I think, is just a huge space to, I think, in terms of like, the future, getting more people moving down that space. Because one of the things that, I think Ajero had mentioned too is just getting getting the tow truck out there, as quickly as possible. But then we made this kind of bridge to how important photos are in the process. And, one of the things that they mentioned, they were piloting this idea that the tow truck providers are actually helping the customers by taking photos, right? And getting those photos into the system. And that was also IAA, a lot of their talk track too, is just around building, hey, we've got this, these photo estimating tools to really help identify those total losses earlier. So, I mean, we definitely had a slant of how important the photos are, but then really how important it is to make that early determination of where to take the vehicle, and how much kind of time and energy and effort and can get saved in that experience. But it's getting the car diagnosed, getting to the right location so it's not being towed kind of multiple times. And if you can also get that early determination of total loss, I mean, that's a win for everyone as well. I mean, we see customer sat high when that happens. And obviously there's, cost savings and efficiencies on, limiting how much you're moving a vehicle as well.
All right. So from there, we moved to another panel around the future of estimation. That was hosted by Marcus Gursky from JD Power. Marcus, welcome to the podcast. Thanks for joining.
Yeah, thanks for having me, Mike, and happy to kind of continue the dialogue here. I think Mark set the stage well. When we got into the estimation panel, right, it's really kind of building out the claims life cycle. So we had a representation from AAA, from a carrier perspective. And then we had partners from Crawford and Tractable, both one on the auto, one on the property side. And it's interesting when you look at the future of estimation through those two lenses. Auto is well ahead of property, and really truly being leveraged today by many carriers. It's becoming table stakes. So how to adopt it, how to leverage, the photos that Mark mentioned, and taking those photos and using large models, such as vehicle data models, right? 17-digit VIN data, so you can really get precise on what's installed and how that vehicle's configured for your pricing. If you're looking at a total loss decision tree, really bringing all of those kind of manual, the old days tear down at the shop type activities and really making it instantaneous and available in the claim cycle. What's interesting though is you can't do that on property, right? Everyone's home's different. We're all on our different home offices here. You can just see everything looks different. So the finishes, the materials, the labor, property's got a ways to go. There really is no, definitive data set there. Yes, they're looking at using technology like digital cloning, right? This home fits this model, and looking at a lot of the eco data here to really model out against cat and climate risk. But at the end of the day, those claims are going to be well behind auto. It's truly interesting, though, to go back to what Ken Rosen shared, right, around the relationship between employee and your customer, right? And happy employees equal happy customers. The evolution that's going to happen for adjusters, right? The tagline is from adjusters to algorithms. It's going to take a different skill set for the claims operation folks. They're really going to have to hire, recruit, and train these folks claims by using technology. Because what's going to be key here in an event like claims, where it's emotional, it's not frequent, it's complex, you're going to have those off ramps to have human intervention during critical points. So it's kind of the relationship of kind of using that straight through processing claims and leveraging technology, but you have to have that human guardrail there because it is so nuanced, the experience for consumers. So talking through their evolution of really starting now on how to hire, spot, and nurture employees that have a proficiency to use data and to use models and teach them the claims experience. So I think that's going to be interesting to watch this play out here in the next 3 to 5 years, because there's just definitely going to be a shift in the types of individuals that are both working in the body shop industry, working with the carriers, working with the ecosystem. So I think we'll see a lot of evolution here in auto. Property's probably 5-7 years behind, so we'll have to kind of wait and see. They'll be able to kind of leverage what's being done well in auto and try and find ways to apply that from a property landscape. But I think unanimously everyone in the room was talking through how the AI infusion in the claims estimations, it's here. Everyone's using it. So how do you differentiate, right? How do you keep that optimal experience? Well, that's the secret sauce that carriers are focusing in on to really optimize the experience and having that omni-channel type relationship for different claim types. So a lot going on, certainly. It'll be interesting to see where we are a year from now on auto when we revisit the conference. But yeah, I've really enjoyed the dialogue and the conversations.
Yeah, thanks, Marcus. And that's a good reminder that throughout the day, when we were talking about the consumer claims experience, with the conversation was transcending across both auto claims and property claims experience. And it is interesting to kind of compare and contrast where both of those experiences are relative to each other. So moving on to the next panel, we covered service and repair. That was moderated by Josh Solomon from JD Power. Josh, thanks for joining the podcast today.
Yeah, thanks, Mike. I appreciate you having me on. Excited to talk about it. We just kind of laid it out, right? There's a very big difference between auto and property, and I had the, honor to kind of have both sides represented. So on the panel, we had Caliber from the auto side, Paul Davis and Contractor Connection from the property side. So I think what we did is we kind of took a look at what they see. Obviously, these are the guys that are calling the front line, right? They're the ones doing the work. They're the ones dealing with the customers in their home. So we had the opportunity to talk a little bit about, what they're saying. And I think, as we mentioned already, very similar to what Mark and Ken laid out in the beginning of the day. We're seeing some improvement in terms of like auto shop backlog. Cycle times are improving on the auto side, but on the property side, there's still a lot of kind of unknown that is throwing the industry through a loop every year, every month. So the property guys mentioned a little bit about some of that uncertainty, just with the weather events, tariffs, and the cost of materials, labor staff, having availability and shortages in certain markets. And I think that was interesting. We kind of explored that a little bit further and how they're utilizing technology, because I think what I heard loud and clear from our partners in the space is that they're trying to do their best with what they got, right? And they're balancing having technology and the right people. So they talked about hiring the right people for the job, leveraging kind of the staff and the experience of key adjusters and people, and then using technology to kind of supplement that to drive for more accuracy, more efficiency, and then focus on the customer experience throughout the process, because they're kind of front line with the customers, and they're the ones kind of doing the work. They often are the advantage or the disadvantage depending on how they act. So customers often go to them with questions and things like that. So they're very focused on how they can help kind of drive the communication, as we talked about in our our auto claim study this year. One of the new KPIs that popped was providing proactive updates during the claim. So we've always had this idea of communication playing a key role in the claims experience for customers. And I think that's what these partners in the space are really trying to focus on, is having kind of standardized process, but allowing some of the technology to provide two-way communication with the customer, or the claimant in this case, and being able to kind of drive some of that communication, and being able to kind of raise your hand if you're having issues. And I know that they're working individually with the carriers to kind of be that face of the carrier in that case. So a little bit of what we explored there, and I think it was just a good dialogue, good discussion, and happy to talk more about it if you'd like.
Yeah, thanks so much, Josh. Yeah, good reminder about the and probably not surprising that once again we see communication just to be so important when it comes to delivering a great experience. From there, we move to a panel on a topic that may not be as common, but is super impactful when it comes to experience, and that was a panel around total loss. Mark, you moderated that panel. What were some of the highlights?
Yeah. So we had, Caliber Collision was in there giving a perspective from the body shops. We had Mitchell, IAA. So it was interesting to kind of have a conversation. And I had a little bit of a unique perspective on some challenges and opportunities they see. In all that's with this backdrop of used, or not used, I guess new cars. New cars hit kind of an all-time high, right? So we know people are paying over $50K on average for a vehicle. They're extending these loans out really long time. So I think one of the big impacts that we saw in the industry is just people being upside down in their loan. Right. And it was something we certainly saw in our internal results. I think it was one of the things I shared in my kind of state of the industry. It was like, it's the people who are upside down that are really pulling down the SAT. And IAA shared a data point that it was, I think she shared that it was about 50% of the loans that they process, people were upside down. And that's just a huge impact when you think of it, a big challenge facing the industry. So we talked about that a little bit, and we're seeing rising rates of total losses. So that's challenging as well too. There's just more of these things, more people kind of having this experience. A lot of them tend to be older, but we've seen the used car values come down a good 10-12% from where they were that post-COVID spike.
Hey Mark, what's driving the higher incidence of total loss?
Yeah, well, I think part of it is what that I just mentioned, when the used car market, part of it trends with the used car market. So when values go down in the used vehicles, what we find is as repair costs are growing, and they are, right, that average severity of repairs are still creeping up because of ADAS technology, right? All these different factors kind of driving that. We're going to start seeing the impacts of tariffs, things like that on parts pricing. So the vehicle repair gets higher, and the replacement value of the car gets lower. You start hitting that roughly about 80% threshold. You hit that more frequently, and you end up totaling out the cars. So I think that's one of the big drivers, which is why we saw the total loss rate go way down after COVID when the used market skyrocketed. Right, there's more cars not hitting that threshold being repaired. So we're seeing kind of that opposite trend now. And Marcus, mentioned too, I thought it was interesting too, because that's something that we're seeing in this space as well. This whole people versus algorithm, right? The appraiser versus algorithm. There's almost less wiggle room now. It's like, hey, right? And algorithms spitting out, here's how much you're getting for your car, and there's less kind of wiggle room, in some of those negotiations now. So, it's this focus on accuracy, and here's that price. And it was interesting because Mitchell kind of provided a point of view on that there are some things you can do to maybe kind of soften that, I guess that negative impact. And I think part of it, again, we touched on just the importance of, early identification of those totals too, getting people through that process, as quick as possible. There's a lot of technology being used today in the total loss workflow, which is, a real promising thing to see. And I think, the outlook is there's going to be more integration, between all these different systems and, getting people kind of on, one integrated platform and kind of move through this process much quicker in the future. So I think that was an interesting point of view.
Yeah, thanks, Mark. Okay, following that, we had a panel on claims customer service. That panel was moderated by Steve Crutzen. Steve can't be with us today. Scott, maybe if you could share with us some of your takeaways you observed from that panel.
Yeah, sure. Happy to jump in with some of the key takeaways. It was an interesting panel. We had executives from Amica Mutual and also Shelter Insurance. Amica Mutual is a direct writer. Shelter Insurance has agents, so kind of different models, different distribution approaches there, particularly when it comes to handling the claims approach. These are both award-winning companies from a J.D. Power perspective the last several years and over the last 20 years for Amica Mutual. A few things they both mentioned, points that were kind of previously mentioned by Josh, Marcus, and others, but heavy emphasis on soft skills like empathy, definitely during the claim process, being very communication oriented. These are things we've always said at JD Power, but they become more critical during the claims process. So both Amica and Shelter, a lot of emphasis on soft skills, empathy, communication, following up. A couple examples. Amica mentioned, for example, how to blend digital with a human touch. They put a message online saying that basically your premium will not increase due to filing a claim. So I thought that was a good example that was shared. Shelter also had some similar examples of what they do around soft skills and documentation. Another point that kind of jumped out from both of them too is, maybe it goes without saying, but make sure you document client preferences, customer preferences during the claims process. Not everyone wants a digital experience. Not everyone wants a pure agent experience. Some people want a blended experience. And we had one of our executives from JD Power speak about kind of having a very seamless, consistent approach through the claims process. That was definitely another point that resonated. And so it was a really interesting discussion. These are award-winning companies that had, maybe some kind of rudimentary observations in some cases, but also it's just kind of blocking and tackling that you have to really focus in on the customer and make sure you're focusing in on empathy, soft skills, communication skills, and that's what carries the day during the claims process.
Yeah, thanks, Scott. So just to kind of build on that theme of where that claims experience is happening matters, we had a panel around digital and AI in claims. That panel was moderated by Eric McCready. So Eric McCready from JD Power, welcome to the podcast. And what were some of the highlights from your panel?
Yeah, at first, it takes a little bit of explanation to understand where these things are and how they come together. So to name the players, we had Enterprise, rental car, specifically Integral, which is a software company owned by Enterprise, and I'll talk a little bit about them in a second here. But we also had JP Hollabaugh from Nationwide. So Enterprise is, they both insure their own vehicles and they service their claims. And they only have vehicles that are a year old or younger. So when it comes to things like calibrating ADAS, they were the first to experience that. Not only the first to experience it at mass scale when it comes to servicing these claims. With that, born out of necessity, is they had to understand which shops can service which vehicles to start to reduce things like number of tows, improve that cycle time, get that vehicle back into service to where it's out being rented and making Enterprise money where it's supposed to be. Which brings us to how Integral was born. So the entirety of how Integral was born is to make their customer, their parent company, Enterprise, happier by having that faster claim cycle, getting the vehicle to the right shop. So they've collated all of this information, whether it's a DRP network or not, for these shops, and it's wholly centered around getting the vehicle to the right shop at the right moment the first time around. So if you think of ADAS calibration as being one thing, but also, specific vehicles, in Audi, for example, if there's certain body damage that requires certain replacements or repairs, right, it needs to be to a certified Audi aluminum shop. So they did that for themselves. They did it to speed that cycle time up and save the company money, which it has. Since then, they've actually released it at scale to the carriers. So they partner with Nationwide, and Nationwide is using this software to help prioritize that body shop list. So when a customer submits a claim and they get in an accident, instead of just prioritizing a list based geographically or to distance to that customer, it's now bringing in more prioritized items like, well, can they fix your car? Right? Now we're going to cut down on a tow. We're going to make that customer happy too, because we're not sending them to the wrong shop. They're also taking into shop loading into example too, right? So yes, this shop can fix your car. However, they are backlogged by 6 weeks. We're not going to prioritize this number one on the list. And it's a great story of how one company developed something to help themselves and realize that it very much applies to those who are in a very adjacent industry.
Terrific. Thanks, Eric. So to kind of finish the day, we had a panel, actually a fireside chat, I guess, on pricing and profitability. Scott, you moderated that panel. Can you help me connect the dots between pricing and claims? What is that connection? And then what were some of the key takeaways from your panel?
Yeah, it's a good question. I thought it was a really good discussion. We had executives from JD Power, Aon, and then also Ken Rosen, who was our keynote, joined us again. And we definitely kind of talked about the connection between, pricing and claims. Ken, for example, talked about having the right rate for the right risk. Obviously selection's a big part of it. We talked about using, for example, VIN data and vehicle specification data just to make sure you underwrite the risk correctly up front, which is obviously a little bit more of a function of pricing underwriting. But on the back end, when you're doing vehicle valuation, you got to also make sure you have the right vehicle specification data. So I know Ken and also the JD Power executive commented that there's definitely an opportunity for the industry to improve in terms of level of refinement and sophistication around that. Another point that was mentioned by the panel, particularly Ken, former claims executive, don't manage differently necessarily during turbulent times versus stable financial times. You still have to kind of press ahead, be strategic. Don't change things dramatically in the claims process. Commentary around don't compromise your claims quality or your claims speed if you can during more difficult times versus more financially profitable times. So those are a couple of the points that were mentioned. Pricing, we talked a lot about that. Pricing is definitely going to be, a little bit uncertain heading in next year. Obviously, auto pricing has stabilized, which is the good news. Property rates continue to be high right now as we head into next year. But a lot of the commentary is make sure you have the data for pricing and vehicle valuation, sophistication, property sophistication on pricing the risk, and also just be nimble because things are obviously going to change, as we head into next year. So some of the comments that came out of that last session.
Thanks, Scott. So I think to sum up, it was really a successful day, right? I think we exceeded all of our goals in terms of attendance and participation. We had a great reception, the evening before, the conference. Great conversation at the breaks, really engaging. So I think we can call this one a success. And Scott, I want to thank you for your leadership in terms of pulling this off and all the planning, and then everybody else who joined us today, who moderated the panels and led the conversations. We got good feedback on all of them. So, Scott, why don't we finish up with just a short ad for next April's JD Power? What do we call it? The JD Power Insurance Summit, right?
The Insurance Summit, that's right. So we're going to do this meeting end of April, April 28th through April 30th, back in Chicago at the Intercontinental Hotel downtown. And we look forward to seeing everyone at that meeting again. It's going to be a broader conference than the one we just conducted in Chicago on claims. It's going to include claims again, probably a little more focus on property claims, but it's also going to hit key topics like acquisition, pricing, profitability again, digital, customer experience, the agent experience. So it's going to be a broader insurance-based summit that we're going to have in Chicago at the end of April.
Terrific. So Scott, Marcus, Mark, Josh, Eric, anybody else I forgot, thanks so much for joining us today. I want to thank our producers, Dan and Carolyn, and then we want to thank our listeners as well. And we'll see you next time.